The head of the American Central Bank in New York is likely to continue tightening monetary policy. The New York Federal Reserve Chairman refuses to say how quickly and how far he thinks the bank will need to raise interest rates in the coming months. New York Federal Reserve Chairman John Williams declined on Monday to say how quickly and how far he thinks the bank will need to raise interest rates in the coming months, suggesting a rate cut in 2024 when inflationary pressures fade. "I think we will need to keep monetary policy tightening for some time, and I expect that to continue for at least next year," Williams said, at an online conference held by the Economic Club of New York. He stressed that borrowing costs need to be raised to reduce inflation, which has soared. "I see a stage, maybe in 2024, when the Federal Reserve will start cutting interest rates because inflation will come down," the central bank chairman continued. The U.S. Central Bank has increased the cost of short-term borrowing significantly this year in its battle to curb inflation, and because of this preferred measure of the bank, inflation has risen to more than 3 times the central bank's target this year of 2%. And while Williams indicated some signs of moving towards reducing inflation, he indicated that interest rates need to be raised more than that, and the amount of raising them will depend on how the economy and inflation develop. Williams is the vice chair of the Federal Open Market Committee, which sets interest rates and whose next policy meeting is scheduled for December 13 to 14. The U.S. Central Bank was able to adopt higher than usual price increases of 75 basis points over its last 4 meetings, making the target price at the current price between 3.75% and 4%. Central bank officials indicated during the bank's meeting earlier this month that they may find space to slow the pace of increases in borrowing costs as they approach a point of rest in their campaign to raise rates. This opened the door to the possibility that the central bank may raise the target price by 50 basis points at the next meeting. Williams gave no indication of how much he would prefer to raise interest rates at next month's meeting, or on the maximum rate that most policymakers predicted in September would be between 4.5% and 5%. With economic growth expected to be minimal this year and next, Williams expected the unemployment rate to rise to between 4.5% and 5% by the end of next year, up from the current rate of 3.7%. He pointed out that a recession is not likely to occur, although there are risks in this direction. Slowing global growth and improved supply chains should contribute to lowering inflation, and Williams indicated that inflation should fall to between 5% and 5.5% by the end of 2022 and between 3% and 3.5% next year.